From an investment standpoint, the lithium industry stands as being one of the most compelling, for those seeking substantial growth in a matter of years. Lithium stands as a critical metal that solves the essential need for energy storage, as the globe turns to the volatile realm of renewable energies. Its role in electric vehicle battery technology and other sustainable systems makes it a key need for the globe in the upcoming years. The transition towards electrification has already seen an acceleration in recent years, and could ramp up dramatically in the coming months. At present, analysts maintain that the world will run into a lithium shortage by 2025, a time when demand is projected to grow rapidly. This creates a profitable dynamic for lithium producers, with the expected surge in the metal's spot price. Once this dynamic becomes glaringly obvious, lithium stocks will likely see a frenzied bull rally, driving up prices throughout the following years. For these reasons, the best time to load up on promising lithium stocks is now. The stocks mentioned in this video are ideal for ensuring sustainable, yet impressive long-term growth. We begin our list by taking a look into Sigma Lithium Corporation, which trades by the ticker SGML. With over 73 million tons of lithium reserves scattered across the Brazilian region, SGML is by far the largest player in the industry, in terms of lithium resources. Its investment potential is further enhanced by it being one of the lowest cost producers of high-purity lithium concentrate. In the last 12 months, SGML price has steadily climbed from below $9 to over $35, yet it continues to stand as being heavily undervalued based on several metrics. For one, it is economically advantaged, by a substantial degree, when considering the mainstream view among analysts of an upcoming lithium shortage, that the industry is likely to face by 2025. During the same time, demand for lithium from EV manufacturers is expected to be dramatically higher than they presently are. As a result, SGML could gain tremendously. Furthermore, Sigma is in the process of drastically ramping up its production, with various extraction plants undergoing different phases of development. SGML management expects to double its production levels by 2024. Based on these figures, as well as market dynamics, the company expects its EPS in 2023 to climb up to $6.90 per share, from the 2022 figure of -36 per share. The stock is evidently a great one to go for, if one aims to capture the booming opportunity in the lithium sphere. Its hard rock mining production cost of $3,400 per ton is drastically lower than the industrial average of $6,250 per ton. It is also highly profitable with an EBITDA margin of 84%. For these reasons, SGML is not a stock to overlook. The second stock we present on this exciting list is Albemarle Corporation, which is essentially a chemical specialty company with exposure to many elements, and trades under the ticker ALB. Albemarle deals with bromine and a range of various forms of refining catalysts, but lithium represents 75% of its annual sales in 2022. Just last year, the metal delivered less than half of its full turnover. It is evident that ALB has benefited tremendously from rising lithium spot prices over the last year. Unlike other players, Albemarle Corporation not only has a truly global presence, but also has been operating lithium mines since 1960, and expanding ever since. It is also noteworthy to point out that Albemarle has been working on its profitability over the years, as it has been scaling up. Its EBITDA margin has ballooned from less than 30% to almost 47% in only a few years. Despite the rapid top-line and bottom-line growth enjoyed in 2022, ALB price remains pretty much unchanged throughout the year. When considering its high exposure to rising lithium spot prices, we see a significant undervaluation at play. It is evident that Albemarle's management is increasingly positioning the company towards the demand deficit expected to come in the following years. Through new launches and facility expansions, the company upped its total lithium production by as much as 30%. Management personnel also point out that ALB could see its annual production more than tripling by 2030. These factors make ALB a highly exciting lithium stock to buy right now before its inevitable takeoff. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. For number 3 on our list, we take a look at one of the biggest lithium players in operation, Sociedad Química y Minera de Chile S.A., otherwise referred to as SQM. This company has a market capitalization of almost $30 billion, with a 60% growth seen in the last year alone. The company is fully based in Chile, and thus, as an international entity, offers much-needed diversification benefits in the present times of economic turmoil. Its significant scale of operations makes it the most obvious candidate to pick in the present lithium market dynamics, given the global push toward vehicle electrification. Through economies of scale, SQM has achieved a significant cost advantage over its competitors, and thus stands as being one of the lowest cost producers of the metal. Given the booming lithium spot price, the company expects its 2022 revenue to climb up from $2.9 billion to a staggering $10.6 billion. EPS during this time is also expected to surge drastically from $2.05 to $13.45. Although 70% of the company's revenues are attributed to the sale of lithium, it does not have all its eggs in one basket, given its exposure to other lucrative domains, such as potassium. These conditions make SQM a ripe investment candidate, especially in the present macroeconomic conditions. Next up, we take a look at APHLF Lithium Corporation, the Canadian micro-capped player that trades in the OTC markets by APHLF. With a market valuation of barely $100 million, APHLF Lithium is one of the smaller players in the lithium game, but its presence in the Argentine lithium triangle stands as being highly strategic. This gives it a very close proximity to the world's largest lithium salt plains, as well as the existing lithium extraction infrastructure that has been established around the area for decades. As a result, APHLF is capable of ramping up its production by a significant degree, over a very short space of time. Most recently, APHLF acquired 985 hectares of another Argentine lithium salt plain, known as the Salar del Hombre Muerto. Industrialists have described this particular site as being one of the most important sources of lithium in the world. Although the company is still in its pre-revenue phase, and is yet to initiate operations, it provides a strong early bird opportunity for those looking to take a position on the stock before its inevitable takeoff. The industry as a whole is supported by strong tailwinds, and thus a player with such a strategic supply advantage is unlikely to not climb high as a result. APHLF is therefore a screaming buy. For the final stock on our list, we take a look into Pilbara Minerals Limited, an Australian mineral and metal miner which trades in the OTC as PILBF. The Pilbara area of Western Australia, where the company's fully owned Pilgangoora lithium and tantalum mine is located, inspired the company's name. Like many other players in the lithium sphere, Pilbara has been on a roll, with the booming spot market scene. Its sales figure for the most recent quarter of $1.04 billion was almost higher than the complete annual revenue amount for 2021. This is a clear indication of the rocketing growth it has been experiencing. The management has been proactive in using this boost to strengthen the Pilbara balance sheet, with the cash position improving from $780 million to almost $1.4 billion. Unlike other lithium companies, Pilbara has a very compelling factor to it, which is the high concentration of institutional investors associated with it. Almost half of the company is owned by investment and banking giants such as Citigroup, HSBC Holdings, and JP Morgan Chase. This high degree of favoritism by financial elites indicates extremely positive fundamentals and markers. Even though PILB has climbed by 75% in the last 12 months, it is still far from realizing its full value potential. The stock, therefore, is a strong buy. That's all from us in this video. We hope the insight we aimed to deliver has proven valuable to you, and would allow you to ride the growth wave that the lithium industry anticipates experiencing this decade. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to check out our website, stockstelegraph.com.